Hello everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. We're going to start off a little different this week as we're going to cover the economic mechanics on the back end of the show here, and we'll have your complete analysis and forecast coming up. And we're going to start off this week with the IBD 50 portfolio. And so if you've been following the show, then you know that the IBD 50 portfolio started on January 28th, 2011 with $10,000, and we divided that $10,000 up into 5 different stock positions from the IBD 50. Those 5 stock positions each receive $2,000 each week. The worst performing stock is sold and a new stock is added to the portfolio. And this week we decided that last week we weren't going to sell off any of the stocks, as 3 weeks ago we went into cash, and we've been holding cash ever since, but we've been still selling the worst performing stock. So we've been left now with only 2 positions, and since we only had 2 positions, said it doesn't make sense to put them head to head, so we decided we're just going to keep the cash this week. And our number 1 performer though this week would have been Hansen Natural. And starting out the week at $72.31, we closed the week at $78.05. We would have had a gain in the portfolio of $132.05. That one hurts. Let's take a look at the chart. And on the chart of Hansen Natural, point 1, the stochastics, they're in overbought territory and got a little slight bearish signal here. We give it a yellow mark. And above that, point 2 shows where we still have confirmation of the bullish trend here with the MACD. This is the black line, has crossed over the red, and we're continuing higher. Histogram bars are rising too, so we gave that a green mark. Up top, relative strength index. It's climbing higher too, so we gave that a green mark. And of course, our number 2 performer this week, and there's only 2 positions, was Dollar Tree. And Dollar Tree started out at $62.65 and closed the week at $65.26. And we would have had a gain there of $86.13. Let's take a look at this chart. And the chart of Dollar Tree looks like it's a little extended here, as point 1 shows stochastics. They're in overbought territory too, and we're getting a bearish signal here. We gave this one a yellow mark. And above that, point 2 shows we still have rising MACD lines, and histogram bars are still ascending higher too, so we gave this one a yellow mark. It's not quite as bullish as Hansen was, so we didn't give it green. Point 3, the relative strength index is bouncing off just a little bit too, so a little warning here, a little caution. We gave this one a yellow mark. And as I said earlier, we're going to do things a little different here. This week, we're going to go back a bit here to the original IBD 50 portfolio and see how we've done. And we review our IBD 50 holdings, our original buy and hold strategy. We had Netflix, 9 shares of that stock, and we started out at $217.98. That was the first stock eliminated from the portfolio. The second stock eliminated from the portfolio was Sohu.com. 27 shares of that stock starting out at $73.88. And the third stock out, it was Cimarex. 19 shares of that stock starting out at $100.23. And it was Xilinx, the 4th position to get sold. 62 shares there at $32.19. And it's Continental Resources, the last survivor of the portfolio. 32 shares of that stock, $61.18. One of these stocks, the best performer, is about to re-enter the portfolio. Let's see how he did. And the number 5 position, the worst performer of the group, it's Cimarex. And we bought Cimarex back on January 28th and sold it on March 4th, 2011. We bought it at $100.23 and sold it at $114.01. Closed on Friday at $83.95, so it was good to take the profit. We had a total gain of $261.82. Had we held it, we would have lost $309.32. And you can see the difference down below of $571.14. Let's take a look at the chart. And on the chart of Cimarex, down below point 1, see where we hit a bottom on those stochastics and we started to climb higher, but we're seeing some weakness here, so we gave it a yellow mark. And on point 2, MACDs, not a lot going on there, and the histogram bars, they're kind of flat, so we gave this a yellow mark. And up top, point 3, relative strength index. You can see where we failed to climb up to a new high, and we started diving a little lower here, but we gave it a yellow mark. So overall, it was good to get out of Cimarex. And our number 4 performer, coming in 4th place, it's Yahoo.com. And we sold Sohu.com on February 18, 2011. We bought the stock at $73.88, sold it at $83.84, so we made a nice profit. It's closed on Friday at $68.47. We received a total gain of $268.92. Had we held the stock, we'd have held on to a loss of $146.07, a difference of $414.99. Let's take a look at the chart. And on the chart of Sohu.com, down below, 0.1, the stochastics hit a bottom, oversold territory, and has tried to reach out, but they look like they may be trying to go back under. Gave this one a yellow mark. 0.2, above that, MACDs, they're still in negative territory, though the black line has crossed the red. It's got a ways to go. And the histogram bars, they're flattening a bit, so we gave it a yellow mark. And up top, 0.3, relative strength index, going sideways, had to give it a yellow mark. And our number 3 performer, it's Continental Resources. And we sold Continental Resources. It was the last stock in the portfolio, surviving all others. Sold it on April 15th, on tax day, go figure. Bought it at $61.18, sold it at $65.95. Closed on Friday, $60.51. We had a total gain of $152.64, and we would have held on to a loss of $21.44. A total difference of $174.08. Let's take a look at the chart. And on the chart of Continental Resources, down below, 0.1, the stochastics, they were bullish, but it looks like we're losing a little steam here, so we give it a yellow mark. And above that, we got a little confirmation of those MACDs, and the black line crossed over the red, but the histogram bars have fallen, so we gave this one a yellow mark. And up top, 0.3, relative strength index, showing a little weakness here, so we gave that a yellow mark too. And that leaves us with our number 1 performer, the first stock up. It's Xilinx. Xilinx held on to the portfolio until March 18th, and it's up against Netflix. Netflix was the first stock out of here. Survived the portfolio just a week. It was out of here. One of these stocks, the best performer, is coming back into the portfolio. Coming in, number 1. And re-entering the portfolio, it's Netflix. And Netflix is going to get another chance. We sold it on February 4th, 2011, after having it for just 1 week. Bought the stock at $217.98 and sold it for $220.07. Closed on Friday at $256.96. We walked away with a total gain of $18.81. Had we held it, we would have had a gain of $350.82. And the total difference, $337.01. Let's take a look at the chart. And we can see the chart of Netflix down below, 0.1, the stochastics. They're bouncing out of oversold territory, and they're moving higher. We gave it a green mark. And above that, 0.2 shows where the MACDs are about to give us a bullish signal to confirm those stochastics as the black line is moving in on the red. And the histogram bars, they're rising up towards the 0 line, so we gave this one a yellow mark. Up top, relative strength index is bouncing up. It's moving higher. We gave this one a green mark. And of course then, that leaves us with our number 2 performer, which of course was Xilinx. And Xilinx was sold on March 18th. We bought it at $32.19, and we sold it for a loss of $31.77. Closed on Friday at $34.64. We had a total loss of $26.04, and had we held it, we'd have had a gain of $151.90. Total difference, $177.94. Let's take a look at the chart. And on the chart of Xilinx, you can see down below 0.1, the stochastics. They were reaching up higher into overbought territory, but they're still looking good. We gave it a green mark. and above that, 0.2. Got confirmation of that move with the MACDs and the histogram bars. They're moving up higher too, so we gave that a green mark. Up top, relative strength index. It looks like we may have hit a little top there, and we've pulled back a bit, so we just gave a little caution there. It's a yellow mark. And the final results of our buy and hold strategy. In first place, we had Netflix, the first stock out of the portfolio. It's back in there for a second chance. And if we had held on to that stock, we'd had $332.01 gain. And second performer is Xilinx. Had we held on to that one, we would have had a gain of $177.94. Continental Resources, in the middle of the pack, we would have had a loss of $174.08 had we held on. Sohu.com would have been the big loser there, $414.99. Good to get out of that one. And it's the worst performer, Cimarex. Nice to make some money in that stock and walk away. We would have had a loss of $571.14. Real simple here. You can see where we just sell the underperformers, the losers, and we make money that way by buying the momentum and the stocks that are moving up higher. That's what you should do. Is I think everybody out there who's listening, try something like this with your portfolio. Sell the losers and keep the winners and try to make some money. And our overall comparison since we started January 28th, 2011 till this Friday, 6/24/11. We have the Dow Jones Industrial Average starting out on January 28th at 11,823, and it closed on this Friday, June 24th at 11,934. And it would have been a gain of, is a gain of 110 points, roughly 1%. Meanwhile, the buy and hold strategy, that came in last place as we were up only $25.89, roughly 1/4%, not much at all. We have a total of $10,025.89 starting out with just 10,000. And on a trading portfolio, we can see the difference. We're up $1,257.12, or 12.5% roughly, a little better than that. And we are holding on now from starting out at 10,000, where we've now got $11,257.12. See the difference here the trading portfolio is doing. As I always say, sell those losers. And so we get two new stocks in the portfolio. And this week, the first new stock is GT Solar. And GT Solar, symbol SOLR, closed the week at $15.30, got a market cap just under $2 billion, average daily volume just over 4 million shares. GT Solar provides polysilicon production technology and multicrystalline ingot growth systems and related photovoltaic, manufacturing. You guys figure it out and do your homework. I can't understand these things, but I know the chart. Let's take a peek at the chart. And on the chart of GT Solar, down below, 0.1, the stochastics are reaching higher. They're looking strong, gave it a green mark. And above that, 0.2. Got confirmation as the MACDs, they're moving much higher, and histogram bars are also lifting up. And we're up top, 0.3, we got the relative strength index is also climbing higher. That's looking good. We gave it a green mark. Also notice, too, that spike up in volume there on Friday. We like that, so looking forward to this coming week. And we get a second new stock in the portfolio. Our second stock up is Biogen. And Biogen, symbol BIIB, closed the week at $103.42, got a market cap about $25 billion, average daily volume just over 2.5 million shares. Biogen discovers and develops, manufactures, and markets therapeutics in the areas of neurology, immunology, hemophilia, and oncology in the United States and internationally. Let's take a look at the chart. And on the chart of Biogen, down below, 0.1 of stochastics, they're in overbought territory, but they're extending higher. We gave it a green mark. Above that, 0.2. The confirmation of the MACDs are there as the black line's over the red and moving higher. Histogram bars lifting up too, gave it a green mark. Up top, 0.3. Starting to form an uptrend here on the relative strength index, and it's moving higher, so we gave it a green mark too. And our holdings going into this week. We got our number one performer, Hansen Natural, 22 shares of that stock, and we got a total value there of $1,742.23. Dollar Tree, we still hold on to that stock, got $2,039.83. And it's Netflix. It's back in the portfolio for a second chance. Got 10 shares of that stock for $2,121.11. And it's GT Solar, 168 shares of that stock we were able to pick up, $2,039.83. Biogen, the last stock we picked up here, got 20 shares of it, $2,572.33. And we've got cash of $261.23, total value in the portfolio of $11,257.12. We're up just over 12.5%, and that's really good considering that the Dow Jones Industrial Average is up 1% and the buy and hold strategy is up 0.25%. Anyway, these stocks have still got to perform or else they're out of here. And we do now our economic mechanics from this week. And if you've been watching the show, then you know that the economic mechanics are based on 3 key principles. And the first point, number 1, the US dollar and the commodities, they move in the opposite direction. Number 2, commodities and interest rates, they move in the same direction. Number 3, high interest rates, they're bearish for stocks. We'll take a look at the US dollar, the commodities, 10-year Treasury yields, and of course the stock market, and watch these relationships, determine where the strengths are and where the weaknesses lie by weighing the number of positives against the number of negatives and coming to a conclusion that way. And we'll begin with our US dollar. And on the daily chart of the US dollar, you can really start to see the strength here as the stochastics down below 0.1. We got another bullish signal here and they're moving higher, gave it a green mark. Above that, 0.2 shows. We got another bounce in those MACDs. They're looking higher, and histogram bars are on the rise. We gave this one a green mark too. Up top, 0.3, relative strength index. Looks like we hit a bottom. We're moving higher there. We gave it a green mark. And over on the weekly chart, down below 0.1, the stochastics. Same thing, they're moving higher too, and significantly. We gave this one a green mark. Above that, 0.2. Got confirmation of those stochastics as the black line crossed over the red on those MACDs. Histogram bars are continuing to move higher, gave it a green mark. And up top, 0.3. Relative strength index is on the move, gave this one a green mark too. And so summing up the US dollar, we analyzed daily charts and the weekly charts. And on the daily chart and weekly chart, we found the same thing. Stochastics, the MACDs, the relative strength index were all positive. Gave them all green marks. And for a total, we had 0 red marks, 0 yellow marks, and 6 green marks for the US dollar. And we'll take a look now at our commodities represented by the CRB Index. And on the daily chart of the commodities, you can see down below 0.1, the stochastics got a little bounce, but they're looking lower now as the black line crossed over the red, and we got another bearish signal. Gave this one a red mark. Above that, 0.2, the MACDs are continuing to decline, the histogram bars are dropping, we gave this one a red mark. Up top, relative strength index is in decline, we gave this one a red mark too. And on the weekly chart of the commodities, down below 0.1, the stochastics got another bearish signal here as we were in recovery. Not looking good though, we gave it a red mark. 0.2, above that, MACDs continuing to decline, the histogram bars are dropping, gave it a red mark. And up top, 0.3, relative strength index continues lower, gave this one a red mark too. And so summing up the commodities, we analyzed daily charts and the weekly chart. And on the daily chart and weekly chart, we found the same thing. Stochastics, MACDs, and relative strength index, all negative. Gave them all red marks. For a total, we got 6 red marks, 0 yellow marks, and 0 green marks for the commodities. And we'll look now at our 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, down below 0.1, the stochastics gave us a bearish signal here as the black line crossed over the red, and they're moving lower, gave it a red mark. Above that, 0.2 shows we got a little confirmation of that as those MACDs, although flat, black line crossed over the red negatively, so we gave it a red mark. Also because the histogram bars are dropping too. Above that, 0.3, relative strength index is moving sideways, so we gave this one a yellow mark. And a look at the weekly charts, down below 0.1, the stochastics. They continue in oversold territory and they're negative, so we gave it a red mark. Above that, 0.2. MACDs, they continue in decline. Histogram bars negative, gave that one a red mark. And up top, 0.3, relative strength index, it's sloping downward, gave this one a red mark. And summing up 10-year Treasury yield, we analyzed daily charts and the weekly chart. On the daily chart, found stochastics and MACDs, they were negative, we gave them red marks. Relative strength index was neutral, so we gave that one a yellow mark. On the weekly chart, stochastics, MACDs, and relative strength index were all negative, gave them red marks. For a total, we got 5 red marks, 1 yellow mark, and 0 green marks for the 10-year Treasury yield. And now we take a look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones, down below 0.1, the stochastics are giving us a bearish signal as the black line crossed over the red. We gave this one a red mark. And above that, 0.2, MACDs look like they're giving up here, and the histogram bars are losing steam. We gave this one a yellow mark. And up top, 0.3, relative strength index looks like it's starting to head lower. We gave it a yellow mark. And a look at the weekly chart, down below 0.1, stochastics are continuing in decline. Looking real bearish here. We gave this one a red mark. And above that, 0.2, the MACDs are continuing confirming that move in the stochastics, and the histogram bars are looking negative too. Gave that one a red mark. Up top, 0.3, the relative strength index continues in decline. Gave this one a red mark too. And summing up Dow Jones Industrial Average, analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics were negative, and we gave them a red mark. MACDs and relative strength index were neutral. We gave those yellow marks. On the weekly chart, we found the stochastics, the MACDs, and the relative strength index were all negative. We gave them red marks. And for a total, we got 4 red marks, 2 yellow marks, and 0 green marks for the Dow Jones. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yields, and the Dow Jones Industrial Average, looking for where the strengths are and where the weaknesses lie. We did that by analyzing the number of positives, weighing them against the number of negatives, and coming to a conclusion that way. And this week in first place, once again, it's the US dollar with 6 green marks, 0 yellow marks, and 0 red marks. And coming in second place this week, it's the Dow Jones. We had 0 green marks, 2 yellow marks with 4 red marks. And in third place this week, it's the 10-year Treasury yield with 0 green marks, 1 yellow mark, 5 red marks. That means 10-year Treasury yields are heading lower, and Treasury prices are moving higher. Treasury prices are one of the places you want to be. Commodities, CRB Index came in last place, and that's the 4th week in a row. We got 6 red marks with 0 yellow marks and 0 green marks. So we'll take a look now at our market gauge. And a look at the market gauge, the object here is to be as far in the right column in bullish territory as possible, and as far away from the left column in bearish territory. This week it's the US dollar shining once again with perfect marks, and that's in the far right column in bullish territory. Second place and a distant second was Dow Jones Industrial Average. 10-year Treasury yield, that was moving lower too as interest rates were falling, and the commodities, dead last place here, moving in the opposite direction of the dollar, and the 10-year Treasury yields moving in the same direction as the commodities. Both are lower. There's your correlation that we were talking about when we were mentioning earlier about those key points. And looks like this week we want to be into US dollar and treasuries and perhaps some select stocks that are out there. And we're hoping to do better as we enter into the market here with the IBD 50 portfolio. It's been 3 weeks now, and it looks like we've been performing real well in some of these stocks here, like Hansen Natural and Dollar Tree. So I'm going to expect a lot out of that this week and some of these new additions. And tune in again next week. We'll do it again. Also, I want to remind you too, you can follow on Facebook or Twitter, wealthguardshow.com. You can find me there and get some updates here during the week. But for now, I'm out.